Hi there, everybody. It's Hal Benz, the town broker, bringing you another local market report for the month of February 2010. This one is Westfield, New Jersey. Keep in mind that the Garden State Multiple Listing is who provides all the data for these reports. All of the information provided here is deemed to be reliable from the Garden State Multiple Listing Service. So for the month of February 2010, we're looking at active listings, and certainly for this year, we're seeing a decrease. 152 active listings in Westfield in February versus 195 last year. The inventory levels are coming down. That's an important thing and a very good thing. But it's important to put this in its proper perspective. Inventory levels are down by 22% versus where they were last year. But if we look back over a 9-year history going back to 2001, what we see here is that while the inventory levels this month are down from last year at this time, we're still not really anywhere near what are the traditional inventory levels in Westfield for the month of February. So it's an important thing to try to absorb as much of that inventory as possible. Once that happens, prices are really going to stabilize and begin to really increase here in town. But we're trending in a really good direction, which is good. New listings for the month. Again, this is part of the reason why the inventory levels are down, because listings coming to market are down this month. We see 16% fewer homes in February 2010 versus 09. I think a lot of that had to do, though, with the fact that we had an enormously snowy month this year, 36 inches plus, I believe. And I think quite a few homeowners just decided to hold off until the weather got better before they brought their home to market. Closed listings in the month, tracking just about where they were this time last year, 15 closings versus 16 closed properties in the month of February this year. But the average days on market is a big change, and this is an important number to take a look at. This year we had 55 average days on market before the property went under contract versus 63 in 2009. And what that reflects is that homes are selling faster. Nearly 13% faster for the homes that closed in the month of February versus the same period in 2009. New properties brought under contract this month. This is a big number, and take a look at this. We've got 23 homes that were sold and went into contract in February 2010 versus only 17 in 2009, and that's an increase of over 35%. What that's telling us is this: even though there was a lot of snow out there that held sellers back from bringing their homes to market, the buyers were out there, and the buyers were out there brave in the weather to take advantage of some really good buys. So it's certainly an important thing that we're going to be tracking, and we're going to be taking a look at just how strong is that buyer demand through the rest of the spring market. The average contract price prior to accepting an offer, which reflects how far did the sellers have to come down off of their original asking price before they found an offer that was acceptable. And in 2010, they didn't really have to move very much. We see just a little bit over 1% they came down before they got an offer that they liked. Versus in 2009, sellers had to come down over 3.5% before an offer came to the table that they found acceptable. I think that's reflective of a couple things. One is that sellers are getting better at pricing their homes properly, and it does reflect the fact that there is a strong buyer demand this spring. The average under contract list price, we're going to call that up about 4.5% over 2009, $664 and change this year versus just about $636 last year. That's the average list price of homes that went under contract in the month of February. But the median sale price of properties that did actually close is significantly higher, $756,000 versus $500,000 last year. So properties that closed, significantly more expensive properties that actually closed in the month of February, although we are seeing a little bit of a trend down to the more moderate price points for properties that went under contract, and that also will be something we'll watch through the spring. The average sale price as a relationship to the final asking price, it was tracking at about the same as last year, 93.8%. But as I've always said, it's not so important to take a look at what the list price to sale price ratio was. What's important to look at is what was the final sale price as it relates to what the sellers originally asked for in their original list price. And what we're seeing here is that in 2010, sellers on average had to come down about 10% in their expectation of the market. 10% is a decrease is what they found in the acceptable offers versus 86.9% in 2009. And what we're seeing here is that I think sellers are just getting a little bit better at pricing their homes. They're not having to come down in price quite as much as they did last year, as the market was really shifting much more quickly in 2009. It was just very, very difficult for sellers to gauge what was the appropriate asking price. Absorption rate. Now, what does that tell us? It's a statistic that tells us how healthy the current market is. Is the market strong and vibrant, or is the market kind of weak and faltering? So it's a simple calculation done by taking a look at the number of active listings and dividing it by the number of reported sales in the past 30 days. In this exercise, fictitious exercise, we've got 120 active listings. If you divide that by 16 sales, let's say, might have been reported in the month, what we would have is an absorption rate of 7.5 months. What we know is that a normal and healthy balanced market is about 5 or 6 months of absorption. Once you get below 5 months of standing inventory, you're looking at a stronger seller's market, and above 6 months is a stronger buyer's market. So where did we finish February 2010? At 6.6 months, which is significantly better than where it was last year. The market is really much more healthy than it was in February of 2009. It is approaching balance. It's not quite in balance, but it's very, very close right now. And with the demand that we're seeing in the month of February, I am expecting to see March be very strong as well in terms of absorption. Another way to take a look at that number is for sellers to understand that for every buyer that's out there that is going to buy a home in the next 30 days, at the pace that homes went under contract in February, they would have approximately 7 different properties to choose from. So there is a lot of inventory still out there, is really the bottom line. We're getting better in terms of our inventory levels, but the buyers still do have quite a bit of choice, and it's very, very important for sellers to price their homes accordingly. Future issues that we're going to be watching. We're going to be taking a look at the fact that at the end of this month, the Fed is going to discontinue its program to buy mortgage-backed securities, and what is that going to do to interest rates and home affordability? Look for another blog post on that topic later this weekend, as I think that's going to be a significant issue. The homebuyer tax credit and what impact is that going to have on the spring market is something that we're going to be tracking. Keep in mind that homes have to be under contract by the 30th day of April in order for buyers to take advantage of that tax credit. New Jersey, too, there is a possibility that New Jersey will have its own home buyers tax credit program. There is some discussion of that floating around Trenton right now. There's a bill, I believe, in committee that's being looked at to see about having a statewide home buyer tax credit. Keep an eye for that on the blog post here. We'll keep you posted as far as that. Shadow market is the last thing we're going to be talking about right now, and what that really is I believe that there's sort of a backlog of sellers who wanted to sell their home maybe in previous years, who've just been waiting for the market to get stronger. And as we take a look at this spring and starting to see that things are really picking up, we may start to see some of that, what I'm calling shadow inventory, beginning to come to market, and what impact is that going to have. So that's something that we're going to be tracking as well going forward for next month. So come on back and join us next month when we take a look at the March market report. I'm Hal Benz, the Town Broker, and thanks for watching.